Video clip. I hope you watched the video clip all about Clapton Re just now. It was good information document about Clapton Re. And now we're going to get back to our slideshow, and we were talking about some of the specialists involved. I think we've covered this yesterday when we look at industrial oil risk, so we're not going to go through that again. What we will do, we will just jump through and go down to the principles of insurance, which again, I'm not going to spend too much of time because we did cover this yesterday. So when we talk about principle of insurance, what is important to note is the insured has to declare the truthful information about the grinder, about the crushers, the generator, the machines that are being used that are going to be covered under the machinery breakdown policy. So they have to give the particular information. So information that we will be looking for, what information underwriters will be looking for will be type things like description of the machine. So that's one. Then the make, what make, whether it's a it could be a Toshiba or it could be a Yokohama brand. Then we want to know the model number, then we want to know the serial number. We want to know serial number, and maybe we can also get some information regarding, we can get the information regarding the year of make. This is good. And then manufacture, country of origin, or country where manufactured. The country where manufactured. Where is the country? And maybe who is the maintenance or supplier in maintenance supplier in Kenya, for example. In Kenya, who is it? So these are some of the information that we would use. It'll be useful when we underwrite under the MB policy. We need the particulars so that the underwriter is aware. So this is under, Toshome says that the serial number. So serial number is important as well to record the particular particulars of the machine that is going to be covered. All right, thank you guys. I'm just sharing with you a little bit about how we look at the principles of insurance and looking at utmost good faith, declaring information about the machinery breakdown coverage. The second point is regarding insurable interest. Who's got insurable interest? The mine owner. The mine owner is one, and the other one could be the bank, because there was some financing arranged. So who are the insured, the parties who can buy insurance? The insured, who could it be? The mine company of South Africa, and the other party could be the bank. So it could be Bank of America, because Bank of America provided financing or provided a loan for the particular machine. So these are the two parties who got insurable interest. So the mine company and also Bank of America, they have insurable interest. So these are the parties who got insurable interest in the said machine. Whether it's a grinder or whether it's a crusher, these are the two parties who got insurable interest. Moving on, let's look at the next point, which is proximate cause. I think we've covered this yesterday. To investigate how the loss happened. So we need to appoint, we may appoint a loss adjuster. We can, what happens is we appoint a loss adjuster. That's one option, appointing loss adjuster, or otherwise we get a forensic scientist to do the investigation, forensic scientist, or we can even call a mechanical engineer, a mechanical consultant. Mechanical consultant may also be able to do the job. So the purpose of these parties is to analyze and to come up with the cause. This is the most important. Then we can establish if the policy will respond. Okay, we need to know this, then we can see whether the policy will respond. Once we can establish policies respond, then we can settle the claim. We can pay and proceed with the case settlement. Okay, so those are some points. Then moving on, we have subrogation. Subrogation is stepping into the shoes of the insured to seek for recovery against the culprit. That's one. And then you got indemnity. Indemnity is to put you back to where you were prior to the loss. That is indemnity, putting you back to where you were prior to the loss. So I did mention yesterday about indemnity and reinstatement. So if you've got reinstatement value clause, then you will get back a new machine, but no betterment features. You get back a new machine, but no betterment. Let me just show that again. Let me just show you that again regarding the principle of indemnity. So the basic policy is talking about indemnity. Indemnity. So indemnity means, it means all for all. If you have a 5-year-old machine, you get back a 5-year-old machine. But now because of RVC, for RVC normally you're paying extra, you're paying additional premium. So once you have paid additional premium, then you're going to get new for all. You're going to get new for all. But remember, no betterment, no improvement features, no improvement features. So that's the difference between indemnity and RVC. Okay, so I just want to share that with you guys. Then we go to the next one, which is where are we? Okay, we have finished indemnity. Then the next one is, or the last one is contribution. Contribution is, what is a full form for RVC? Sorry, Mr. Zul, I should have mentioned it. I didn't, sorry. I better write it down for you in full. Okay, so this should be written as reinstatement value clause. Okay, this is reinstatement value clause. This is the meaning of RVC. So this is normally applicable for property policy. You have to compare between indemnity and RVC. So most of the time, the customer needs to buy the RVC clause. So I don't know, Mr. Zul, are you giving the RVC option to your clients? Okay, there's a request from, Joseph asking me to repeat. No, Kelvin Wangi is asking me to repeat. So basically, there's two options. The basic policy talks about indemnity. So this is the basic policy. This is the basic policy. Basic policy is talking about indemnity. However, you can consider to introduce the RVC. RVC is new for old. So talk about my handphone. This is my handphone. My handphone is 5 years old. So if I insure it under indemnity, I will get back a similar 5-year-old phone. I'm not going to get a new phone. But if I go for RVC, then I'm eligible to get a brand new phone. But I cannot get an iPhone 13. I will only get an iPhone 10 because this is an iPhone 10. Got it? And I can't get any benefits. It's the same iPhone 10 which I have. I can get a new one, but will not have any extra features. If there are any features, if there are any new features on it, then this factor will apply. So maybe we will deduct 15% because there's some betterment. If there's some betterment, the insurer will deduct 15%. This is to take care of the betterment features in the handphone. This is just an example I'm giving you guys. Mr. Zul, are you okay with my example, Mr. Zul? Zul? Mr. Zul is okay.
Thank you, sir.
Okay, thank you, thank you. All right. What about Kelvin Mwangi? Kelvin, where are you, Kelvin?
Thank you, Pooba. I'm in Kenya.
Kelvin is in Kenya.
Yes.
Yeah. So have I made myself clear about indemnity?
Yes, you are made clear. Thank you so much.
Thank you, Kelvin. So next, I will go on to contribution. Contribution is the sharing of the loss if there's more than one policy. So this can happen sometimes. This can happen sometimes when you have more than one policy. So I'm going to give you an example now when you have more than one policy. So the classic example, okay, I'm going to give you this example is let's clear this. This is a factory. This is the gate. This is the factory. This is the factory building inside. And they have a particular machine here. So this is a machine. And the factory owner already bought a MB policy for this machine. And they bought it from First Sun Alliance, and they bought the insurance for let's say 1 million USD. This is an MB policy. But at the same time, the client took financing. Client took a loan to buy the machine. So when the client took the loan to buy the machine, the loan is given by the bank. So the bank arrange a MB policy from let's say it's called from Sanlam. They arrange a Sanlam. So they arrange another policy from Sanlam. And this policy was, let's say, 800,000 USD. So unfortunately, what happened was there was an incident. There was an incident, and the machine broke down. The machine broke down. So once the machine broke down, this policy will pay. This policy also will pay. Both the policy will contribute, and this is called contribution. So what I want to explain to you guys is this is called contribution. So this is contribution, contribution, and both policies will pay. What is the formula called? The formula is called independent liability calculation. I did mention this yesterday. So this is called independent liability calculation. So you use this formula. So what you got to use is, you got to use two items. You got to use the sum insured, and you got to use the deductible, and share the loss. You got to share the loss using, you have to share the loss using those two values. You got to use the sum insured and the deductible. And the claim, let's say the claim is 100,000 US. So this claim is partly paid by this policy and partly paid by this policy. So this is called contribution, guys. This is called contribution. Right, I will stop here and ask if anybody wants to ask me a question. Okay, everybody is okay. Mr. Zul, are you okay with my example for contribution? Does this happen in the Bangladesh market? Do you have two policies coming in?
Yes, Mr. Pooba. Well, you're absolutely right. Yeah, we do that. And we do this proportionately as per, suppose Salma has $800,000 sum insured and the other one is $1 million. So the claim is $100,000. Then it should be divided into proportionately between two.
Yeah, it'll be shared between two policies, but it's not 50-50. It is not.
It is proportionately.
Proportionately, yes. Thank you for your sharing. Thank you for sharing. Okay, so this is the sharing between two policies. Okay, thank you for that. Mr. Namushi says deductible. Yes, if there's deductible, then you have to apply two policies, different percentages. That's correct. The Kelvin's point about nobody knows, too bad. If they don't know, normally the loss adjuster will do the investigation. So it is the responsibility of the insured to declare. When the loss adjuster comes around to ask, they will ask them, do you have any other policy? Do you have financing? Then they will find out if there's another policy. The loan, when they arrange a bank loan, the bank will want to protect their interests, and that's why they insist on arranging a finance. Similar, like when you buy a new car, normally when you buy a new car, you take financing, the bank asks you to buy insurance. That is to protect. The two sides. Now, regarding example, I don't want to go into example in this class because it is quite time consuming, but I suggest you guys go into Google and look for this. If you go to Google, you can see some examples. Go to Google and look for independent liability calculation. Let me give you 2 minutes. I want all of you to go to Google and have a look. Just go to Google and check this out now. Go to Google and check it out now, and you will see. Okay, guys. The example, I suggest you go to Google and have a look at it because they have the option between the sum insured and the deductible. All right, please go into Google, have a look. But if you think that you're not sure, okay, let me do it right now. I will go to independent liability calculation. Okay. Okay, guys, I'm just showing you this one. Can you see this calculation here? This one, policy A, sum insured 10,000 pounds. Policy B, sum insured is 20,000. Loss is 15,000. So here is the calculation. Step one, calculate independent liability of policy A, which is 10,000. Second, independent liability of policy B, which is 15,000. So because there's a limit, there's a sum insured limit. So you follow that. Then you do the shared proportion between the two policies, and then you get the compensation amount. So yeah, so that's basically it. You need to just do some research to figure it out, because examples like this can be quite complicated. Okay, all right. So I will just ask you to refer to the internet to see. Okay, guys. All right, so this is contribution when there's two policies. Okay, some of the interesting technical policies are like CAR, ER, and ALOP, advanced loss of profit, the delays. IAR we're doing today, then IR with MB policy, then there's machine breakdown, you know, there's machine breakdown. Sorry, Salom, I will have to talk to you separately. Electronic equipment insurance, then MB LOP. You can also have machinery breakdown together with loss of profit. That's quite normal as well. And then you've got DOS, deterioration of stock. Deterioration of stock is normally taken up by large supermarkets. They cover for the stock that is damaged due to a machinery breakdown. So for example, the refrigerator breaks down, then the stock, the meat and vegetable gets damaged. Okay, let's talk to McWib. McWib wants to ask me a question. Mr. McWib.
Yes, Mr. Pooba.
Yes.
I can see there are different sum insurers from the three insurers. How is the sum insured determined in this case? Is co-insurance agreement between insurers to insure, let's say, this machine? Is it an issue of capacity that brings this co-insurance into practice?
No, co-insurance is a different story. The contribution is different. Two different stories. So let's not get confused. I will tell you a situation like this. Okay, let's clear this doubt about this point. I just want to tell you that these are the two situations. One is insured. This is insured. This is the insured, and the sum insured. Okay, the machine. What is the machine? It is a generator. So generator. What make is it? It is it's a China make. China Jing, China Jing, and the value is USD 2.5 million. So they bought two policies. One is bought by owner from, they bought it from, they bought this from Activa Insurance. Okay, they bought it from Activa Insurance for 2.45 million. They bought a MB policy, and they also took a loan. They took a loan. They took a loan. Loan was taken from Bank of Uganda. So when they took the Bank of Uganda, they insist on buying a separate MB policy, and this MB policy was taken from Jubilee Insurance, So they bought it for 2 million. They bought 2 million because the loan amount is less. Now here there's two policy. In another situation, the insured is China Jing. The China Jing, no, the insured is somebody else. Let's change the insured. The insured is, they bought a crane. They bought a crane, not crane, they bought a fixed crane. They bought a fixed gantry crane, fixed gantry crane. And this crane is made by Takano. Takano is a Japanese brand. It's a Japanese brand. And the value is 10.5 million. This is the value, is USD 10.5. So when you want to buy the insurance, the broker said the value is very high. Broker said insurers have no capacity, so suggest to go for co-insurance. So this is called co-insurance. How does co-insurance work? So I'm going to show you now. This is going to be on co-insurance. So when it comes to co-insurance, what happens is the leader is First Sun Alliance Insurers. They take 5.5 million. Then the balance share is shared between balance co-insurance is shared by which company is this? Zambia Insurance, Zambia National Insurance, which is taking 2.5 million, and one more company is Cornerstone Insurance. They took another 2.5 million. So in this case, this is called co-insurance. So the leader is First Sun Alliance, which takes 2.5. They are the leader. Then the co-insurance is shared between Zambia National Insurance 2.5 and Cornerstone 2.5. So in the situations are different. One is called double insurance. This is double insurance. So in this case, contribution will apply. So here contribution applies. Contribution applies. Here, no contribution. Now, guys, is it clear? Guys, is it clear? Who's asking me? Who asked me this question just now?
I think it was Mark Webb.
It's clear. I got it.
Yeah. So, who's answering me just now? Who answered?
Nana.
Nana. So Nana, can you see the difference between the two scenarios? The generator that is a China Jing brand, you are buying, you have two insurance policy, contribution will apply. But in the case of the Takano Japanese crane, there's only one insurance policy. It's a co-insurance arrangement. So First Sun Alliance is the leader with 5.5 million, and the balance 2.5 million is shared by Zambia, National Insurance, and Cornerstone Insurance. Nana, is it okay?
Yes, it is. Thank you.
So in case of a claim, all three of them have to pay their proportion part. It's just straightforward co-insurance. But the one on the left is contribution. It's different. Okay, thank you.
Okay.
Thank you guys. So there is some remarks in the chat group. Pooba, this is double insurance. Yeah, it's double insurance in the case of the left-hand side. Nana, can you come on the line?
Yes, I'm here.
Nana, do you face the double insurance situation on the left? Because the owner bought a policy and there's also a bank loan insurance policy. Does it happen in your country?
Yes, sometimes it happens.
It happens.
Usually for reinsurance, it's easy to see because you may get the claim from two different insurance companies who are trying to recover from reinsurance. So with reinsurance, usually it's easy to spot it. But for the insurers, yeah, sometimes it might be difficult.
So I think it's more important for the loss adjuster to do a proper investigation and try to find out the answer. You know, so it is not uncommon. Nana, you agree that the left-hand side is not uncommon? Agree?
No, it is not. It is something that happens. Yes,
it happens. Okay, so the left is okay. Now let's talk about the right-hand side. Is that common in your country?
Yes, it is.
It is because First Sun Alliance have a capacity problem. They cannot underwrite the entire 10.5 million. That's why they just took 5.5 million. Is that correct, Nana?
Yes, that's very correct.
Yeah. So so everybody is clear. Nana has confirmed it. If anybody is not happy, please look for Nana in where is Nana? Nana is located in which country? In Ghana.
Ghana, yes.
It's easier to go to Ghana than come to Singapore to look for me. I'm a bit too far. So I've just tried to make it clear. Thanks, Nana, for sharing your confirmation on this. Yeah, Austin says it's double insurance. So the left-hand side is double insurance, but you can't stop it from happening because in real life, there are different parties who are selling the product. So we don't want to stop them from selling or arranging the insurance. So MacWeb says that a contribution is only applicable when there's co-insurance. No, it's not. Wrong. MacWeb, can you come to the line, MacWeb? Mr. MacWeb, are you there?
Yes, I'm there, Mr. Pooba.
So you are not correct here. You say that contributions only applicable when there's co-insurance. It's not.
Okay, I sent that question before I raised my hand, so you had already answered me with this example.
Okay, so now you're clear. Now you're clear. Okay.
Yes, I'm now clear. Thank you very much.
Yeah. All right. So Abby has shared the example from the Chartered Insurance Loss Adjuster book on the contribution calculation. Yeah. So I'm sorry, Joseph has given one example, but I cannot go into that. Nova, Michael is now happy, he's clear. Now, Namushi says, typically for MB in DOS, suppose a fuse fails due to unstable power, freezer breakdown, would that be covered? Okay, we have to look at the wording. We have to look at the wording, and we need to be clear about the proximate cost. It's an unstable power, so it's an external factor. Most likely, Mr. Namushi, Joseph, I think if it's an external factor, the MB will not trigger. The MB will not trigger. MB must be an internal issue. It's an internal issue. So I don't think it's going to cover. Okay, Michael clarifies that the right-hand side is clear. Okay, that's good. That's good. So everybody is clear. Maybe some of you may want to take this photo as well for the record. You know, you just want to take a photograph of this so that you remember the training session that you attended here with Clapton Re, organized by OESAI on the 26th and 27th of July, 2022. All right, feel free to take a photograph for your own record. Okay, there's a question here from Teshom Arsa. He or she is having double insurance is allowed in respect of insurance. No problem, it's up to the customer. They want to buy more insurance. There's nothing to stop them to buy more insurance. Teshom, you want to come to the mic? You want to open the mic, Teshom? Teshom, you want to open the mic?
Yes.
Hi, Teshom. Where are you from, Teshom?
Ethiopia.
Ethiopia, yeah. How's the weather in Ethiopia?
It is winter season.
Winter season. Okay. You got your jacket on?
Yeah.
Okay. So regarding your question, the double insurance is you cannot stop it from happening. You can't stop it from happening. There's no regulation against that. All right. Can you buy two mobile phones, Teshom? Can you have two mobile phones?
Yes.
Yes. So it's the same. You can buy two insurance. In the example which I gave you, one is bought by the owner. The other one is bought by the Bank of Uganda. So it's a different interest. Is that okay, Teshom?
Okay.
Thank you. Thank you.
Sorry,
Yeah.
Mr. Pooba.
Yeah, who's this? Nana.
Not to belabor this point, but I think what the person was trying to establish was that, you know, because of fraud and other vices.
Yes.
So if, you know, sometimes some people can intentionally take two insurances because they want to make a double claim.
A double claim.
So
Yeah,
it's not advisable if you already have insurance on a property. It's not advisable to go take it because it could be it can be seen as fraud, and it could even lead to repudiation because you know, when you're filling a proposal form, they'll ask you, do you have any other insurance on this property? So if you say no and you have it at the point of claim, that particular claim can be repudiated.
Yes, I agree, Nana. I totally see your point. I agree with you. However, I'm trying to tell you here in this example on the left-hand side involving the generator China Jing, I am telling you that one was arranged by the owner of the machine. The other one was arranged by the bank because they take the financing. It's two different parties buying the policy. Compared to compared to travel insurance, maybe Nana wants to travel and she wants to be super secure. She buys two travel policy. So that is double insurance. But again, you have to declare that you have another policy in the proposal form. Travel policies, they actually ask a question. Do you have any other travel policy? So you have to tick the box, Nana. Is that correct?
Yes, it is.
Yeah. So what you say is right. But if there are two different parties buying, you can't blame one another. You know.
Yes, if it's not intentional. If it's, but even in this case, the bank could find. Some banks can even find out if if it's a factory or a mining company they are insuring. They'll ask them if they have insurance, and they'll ask them to add them on to their insurance. So they may not necessarily take a brand new policy, but if it happens, that is unintentional. So that can be considered.
Yeah, correct. So these are issues that can become a problem. I think Zulkifli from Green Delta in Bangladesh also raised the same point. Double insurance sometimes involves moral hazard. Yes, I agree with you. So it was intentionally done. I agree with you. It's a moral hazard. But we are not going to go into moral hazard issues now. But I agree with you. Yes, I agree with you. Okay. Okay. There's an interesting question here from Deas Desi Banda Siwawa. Desi, do you think you can come to the mic? Desi, you want to come to the mic? Desi?
Hi.
Desi.
Hi.
Hi, Desi.
I'm here.
Desi,
Hi.
where are you from, Desi?
I'm from Zambia. From Clapton.
From Zambia. Which company?
Clapton Re.
Oh, Clapton Re are not allowed to ask questions because you're special. You are the VIP. But because it's coming from Desi, are you also in Tiongi's team?
Yes, I am. Partly.
Oh, okay. Okay, great to hear from you. Desi, I was just disturbing you. I'm just teasing you. Can you, why don't you read your question so everybody hears your voice, and then we can talk about it. Go on.
Okay. All right. So my question is, what is your opinion on an incident where a machinery or a genset, for instance, produces a strange noise, and when it's checked, everything seems fine, and the use is continued. Thereafter, there seems to be some noise, and an internal assessment is conducted, and then it is so discovered that some components to this machine are damaged. So my question is it a matter of negligence that the use of the machine continued despite an indication of the noise?
They see this is a classic drama involving machinery breakdown losses.
Okay.
It is a classic situation because the guy who's operating the machine, the technical manager at the mine running the machine, he is not reading the insurance policy. He wants to get the machine running. He's got to do the production. He's got to do the operation of the mine. He doesn't have time to look at the policy. So he tries to solve the noise, but then he continues running the plant. And after some time, there is a breakdown. So I rather not go into details here, but I will say that if the loss is notified as a claim, what we have to do is appoint a loss adjuster, and we also want to get a forensic scientist involved. Do you do those kind of things in Zambia or in your region? Desi, do you get a forensic scientist involved?
Yes, we do. We
Okay.
actually involve different parties to a loss when it occurs, depending on the circumstances. Yes.
Okay, so I would say the forensic guy will do the investigation and come up with a report to say what is the problem and why it happened. Now, I don't think we can blame or blame or decline the claim because they didn't do anything about the strange noise. They did stop work. They did try to solve the strange noise, but the strange noise continued. So, you know, just because you had a stomach ache this morning, does that mean that you don't come to work? You still come to work. You just take some water and you don't have a breakfast and you still come to office. Now you have to do something. So you didn't have your breakfast, but you came to the office anyway. Now you can't be blamed for that. So sometimes the technical guy has to do what he has to do. And then we have to face the drama with the claim. But there's no simple answer. And to say, I don't agree this is negligence. Are you saying they should stop immediately and dismantle the whole machine just because of this noise? I don't know. I mean, we have to analyze the actual circumstances leading to this disaster. Desi, that's all I can tell you.
Thank you, Pooba.
Thank you.
Thank you so much.
But it is, I have come across these kind of scenarios in the past. Good point. Good point.
All right. Thank you so much.
Thank you, Imet. Thanks a lot. That was Miss Desi from Clapton Re. So now everybody knows that Clapton Re has got quite a few good people on board. You can call them if you've got your reinsurance requirements in Zambia. please feel free to call Clapton Re people, Tiongi, Daisy, or you can talk to Cynthia, who's their COO, on your requirements for reinsurance with Clapton Re. Now, there's a comment from Emmanuel, along with what Nana said, the bank can be added as a beneficiary in the owner's policy. Yes, that is fine. That's correct. The policy can be made more coordinated. But sometimes, you know, the people don't talk. The policy taken up by the owner with Activa Insurer was arranged by a different department, while the loan was arranged by another department. So you could have different situations as well. That's quite normal. Yeah, but Emmanuel, I agree with you. Then there's a comment here from Angela. One should not take two policies on the same property. The interest of the bank should be on the insured policy. Yes, you're right, Angela, but in real life, there could be coordination issues. It's normal to have coordination issues. It's not surprising. Next question from Matthew Harrison. Matthew Harrison's asking, how will indemnity work in the scenario since both the insured and the financer have taken a policy? So that's where it is. It's going to be independent liability contribution. Both policies will respond, and you cannot make a profit from these policies. You're going to get the same amount of compensation. You know, it's not 50-50, but you're going to share between both policies. Can I ask Matthew to come to the line? Matthew Harrison? Matthew, are you there? Hi, Matthew. Where are you from?
Currently working with Pink Brokers Zambia Limited in Lusaka, Zambia.
Sorry, you're in Pink Brokers.
Yes, sir.
Pink Brokers. Okay. Matthew, so the answer for your question is, the answer to your question will be indemnity is to put him back to where he was. So they cannot make double claim. They will still have to share the loss. You want to guess what is the claim amount for the China Jing generator damage?
I didn't get the details of the damage. I'm assuming it was a total loss.
Okay, so total loss is 2.5 million, right?
Correct.
Okay, so the 2.5 million figure will have to be shared by both policy. So both the policies have to share. Perhaps Activa Insurance Company will pay half of it, not half, but nearly half. And then Jubilee Insurance will pay another portion of it. End of the day, nobody can make a profit from this exercise. That's the most important thing. There's no making profit. It's an indemnity to put back the owner, to give back the compensation based on the two policies.
Okay, so my question was more or less to deal with who the payee would be in this case. So assuming that China Jing, who are the insured in this case, went and got some sort of financial assistance in terms of my determination at that case.
Sorry, please repeat. Your line dropped off for a minute, Matthew.
Sorry. So I'm looking at your scenario where you're saying China Jing are the owners of the generator and they got a loan from the Bank of Uganda.
Yes.
So my assumption here is that by getting a loan from the Bank of Uganda, it means that China Jing didn't have the capacity to purchase this particular generator.
Yes.
And so they went and got the loan from Bank of Uganda, who have the financial interest in this particular generator, even though China Jing are the ones making use of it. So the compensation in that case is supposed to come to Bank of Uganda.
Yes,
exactly. And that is why I was asking how the principle of indemnity would work, because China Jing, as much as they're making use of it, don't have the particular financial interest, only to the proportion that they've already paid the loan.
Yes, correct. So you're getting into the detail. End of it, part of the amount will be collected from Activa Insurance. The balance will be connected by the Bank of Uganda, and they will be taking the money, and they might repay the owner for some amount of money if they have paid substantial amount of the loan. If they have not paid the loan, if the loan is still outstanding, then too bad. Then Bank of Uganda are looking after their own own bank balance and they will take care of the money themselves. They're not going to give the money back to the China Jing. And also don't forget, this particular machine is under financing. As long as under financing, the machine still belongs to the Bank of Uganda. Bank of Uganda becomes the temporary owner of the generator for the next 5 years until the loan is settled. And the loss happened within the first year. So sorry, Bank of Uganda takes over this particular machine here on moving forward, and they want to get it repaired or they want to get it sold for scrap. That's up to the Bank of Uganda because they have ownership as well as the financer. Is that okay, my friend?
Yeah, that's fine, but it also raises a question now of what the purpose of getting the insurance policy was on the part of Bank of Uganda if they're already registered as first loss payee on the policy of China Jing. So I'm still debating the whole thing of having two policies, but I understand.
It's not, Matthew, it's not a perfect world. A lot of parties buy policies, you know, different parties buy policies. You can't stop them from buying policies. You know, they as long as they pay the premium, it's fine. You know, are you married, Matthew?
Yes, I am.
Yeah, so your spouse may have bought a policy on your life without telling you, but you have your own policy as well. Things like that do happen. She doesn't need to declare to you that she bought a policy on your name, but she's your spouse. She's entitled to buy a policy and put your name as the insured. So you have two policies, but you don't know about it. So it can happen. Life policy, it can also happen in property. There could be two policies, but maybe you don't like it, maybe you don't know about it. That's another story.
Well understood.
Okay, thanks Matthew for your interest. I like your question though. Namoshi, banker will be paid first in the case of total loss. Yeah, that's another story altogether. Who's going to get paid and so on. We're going to go into details. There could be a loss payee clause. There's going to be other wordings as well. That's another story. Sandra Okumo is having the same interest in the subject matter of insurance requirement for contribution. There are a few, I don't want to go into the details of the requirement on contribution, but generally the interest must be the same. You must talk about the same generator. It must be the generator, the China Jing generator. Yes, it must be the same interest. Okay, thanks, Sandra. Geraldine asked contribution, each policy pays their share. Yes, each policy pays their share. Namoshi, financial will be first loss payee as they claim property supersedes the asset owner. Yeah, that's correct. There will be a first loss payee. Nyoba Michael, the loss and the premium will be shared by parties according to the treaty proportion. Yep, correct. It will be shared according to the proportion, according to the independent liability calculation. According to the independent liability calculation. That's correct. Maybe I ask Nyoba Michael to come to the mic. Nyoba Michael, are you there?
Hello.
Hi, Nyoba.
Can you hear me?
Yes, I can. Where are you from?
I'm from Nigeria. I work with Cornerstone Insurance.
With Cornerstone. Okay. So are you clear with my answer?
Yes, your answer is perfect. But in the situation whereby, but in some countries, it's not applicable because of
I beg your pardon?
I said, but in some countries and some, like in Nigeria, it's not applicable because there's a lot of fraudsters that want to, benefit from insurance company where you have two different insurance and you are buying from insurance company without involving them. If there is a loss or if there's a claim, the insurance company will want to know if you have already subscribed to another insurance company. And once they get to find out you have two insurance on one particular product or one particular insurance, paying the claim will be very hard. Because we are trying to, we're trying to defraud the insurance company. They're making money. Insurance is all about. Insurance is meant to reinstate you to your normal position when you face that loss, not you making money from insurance company.
I agree with you. I agree with you, Nova. I totally agree with you. But there could be moral hazard issues. Mr. Zul from Bangladesh already raised that there could be moral issues as well. Okay, Thank you. Thank you for sharing. Thank you for sharing. I want to ask Mr. Ashok Kumar Chawla to say a few words. Ashok has raised some questions. Ashok, you want to speak up on the mic? Ashok?
Thanks, Pooba. Good morning, everybody.
Hi. What is your point?
Yeah, there are circumstances where the borrower is not happy with the policy which is taken by the bank.
Yes.
Of course, tied insurance, tied lending, and all those things. There's a challenge in some countries, and some countries are not bothered about that. So he is ready to borrow because the terms and condition of lendings are good, interest rate is good, and he knows bank is in trouble. If it goes down, he may not have to pay for long. There are so many reasons for that. So he said, okay, go ahead. He buys insurance, and then he goes to his insurer and says, I want to buy insurance because I'm not comfortable with the company they're buying insurance from. That company may be insolvent, capital adequacy requirements are not there, claim settlement practices are bad.
Yes.
So there are two situations there.
Yeah.
You can issue a policy on rate or proportion basis.
Yeah.
Rateable contribution basis, or you can say Excel basis. That any claim which is not paid by that other insurer, then I'll come in.
Right.
So the same way it can happen in co-insurance also. One of the insurers or two insurers, they don't meet capital requirement, they don't meet solvency requirements, and insurers feel comfortable. Then one of the leader or one of the other insurers, he can buy an Excel cover with a specialist market. In case company D defaults, their share of that they can cover it. So coming back to that again, I had another question there, co-insurance, deductible.
Yeah.
The practice is in Africa, sum insured is 1 million. If the loss is above 1 million, so deductible, then it applies still 10%, they pay 900,000. In America, they pay 1 million.
Right.
As long as deductible, the loss is above the sum insured is paid. So that basically no deductible applies. Those contribution, rateable contribution will be more complicated in that cases.
Yeah.
That's why I was raising these issues. Yes, we can all do research, but we shall be aware of that. Thank you.
Okay. Thank you. Thanks, Ashok. Thanks for sharing. We have to get on with the subject on that we have on the policies and so on, because we need to go into the details. Okay, there are also the delay covers in machinery breakdown. You have BI, advanced loss of profit, DSU, LOP. These are some of the coverage. Business interruption cover, advanced loss of profit, delay in startup. These two are under the construction policy. These two are under the construction policy. Hold on. What happens is I'm going to draw this to explain that these two are under the CAR or EAR. CAR or EAR. And then you've got this LOP normally coming with the MB policy. MB policy. All right. So just want to mention that. So I just want to mention that, and then go back to the slide. Back to the slide and trying to explain under the property all risks, you've got section 1, section 2. This is the standard IAR, section 1, section 2. I've already covered this earlier. Then you've got all the machines, the mine machinery covered. You got the lifting device, engine, pumps, blowers, you got boilers, and then you got grinders, crushers. These are the machines. So the machine breakdown policy will cover a variety of such machines. Okay, you got chillers, you got electric motors, and so on. These are the items which are covered in the MB policy. So moving on the MB policy, the policy wording. Basically, this is the policy wording. Now, this is called the operative clause. Unforeseen and sudden physical loss or damage from any cause such as defects in casting material, faulty design, faults at works and erection, bad workmanship, and it goes on. It goes on to other items as well. Lack of skill, carelessness, shortage in boilers, physical explosion, short circuit, or any other cause not specifically excluded. So you can see here, the coverage is very wide. So I just want to highlight to all of you guys that, and ladies, that this policy is unique. It even covers the faulty design. faulty design is covered. Although in the industrial all risk policy, it does not cover faulty design. In the CAR policy, it does not cover. You need to do a buyback. But for machinery breakdown, it does cover for faulty design. So it's important to conduct a proper investigation to find out how this loss happened. The proximate cause is very important. Okay, the proximate cause is important. Let's see, there's a comment here. There's a question from Joseph. Can I take a BI policy for non-manufacturing concern? Yeah, a shop, warehouse, hotel. It's possible, but again, it depends on the underwriter. Some underwriters have got certain restrictions. As long as you buy a fire policy, you can attach with the BI. As long as you buy industrial all risk, you can attach with BI. But mind you, yesterday we learned from our friend in Bangladesh, there's a limit. There's a minimum sum insured limit under IAR to buy. Similarly, in Malaysia, there's a limit, 300 million Malaysian ringgit to buy. That works out to about 100 million US dollars. You need to have minimum to buy the policy. Sylvie, it's about the same. PAR and IAR, just about the same. Similarly with asset all risk. Assets all risk. Some markets they call it assets all. Asset all risk is also similar. Sorry, but the spelling is wrong. Assets all risk. Basically, the wordings could be. It's about the same. Section 1 is property. Section 2 is BI, business interruption. Okay, so that's the difference. Thank you, Sylvie. And moving on, we are going back to our policy. We are looking at the coverage. So the coverage is very wide. I just want to compare here. Yesterday, we have covered about the IAR. Today, we are going to go into the machinery breakdown. So I need to tell everybody something, that when we compare the IAR and we compare with the MB, let's look at some differences, guys. Let's look at some differences. This IR, this MB. So IR is from external. Mainly is due to external features or perils. Okay. For MB is internal breakdown. So that is the difference. One is from external features, one is internal. So what do you mean by external? If this is the factory, when I say let me draw both. Okay, there's two here. If I talk about external factors, is from external. The flooding, the storm, the heavy rain, and the impact damage, and the aircraft is external factors. MB is internal. How is internal? How is it internal? It's internal. Stomach pain, heart attack, internal stomach problem, bone injury, all are inside. So this is the difference between the two. IR is some external perils, MB is internal, inside. This is just an overview. I'm just making it very simple for you all. Okay, I'm just giving you all a very simple overview. Anybody want to comment on this? MacWeb, anything to say between the two, IR and MB? Anything to say?
Okay, Mr. Pooba, so you're saying for the section 1 on the IAR, a loss is to be caused by external conditions, let's say insured perils, which are external in nature. Then for machinery breakdown, it has to be internal. Like, yeah. let's say the power surges and all that stuff. That's if it's an insured peril.
Yeah, correct.
Okay.
Thank you. I'll have to mute everybody now. There is a comment from Shabana Kasu, internal mechanical derangement, the same. Yes, it's the same. Mechanical derangement. So in my drawing, I better say that this is all the internal stuff. So the internal stuff. Oops. Not able to get it. Yeah, so it's very much an internal thing. So internal thing is covered. Internal mechanical or electrical is covered under this. So it's mechanical or electrical is covered. So this is happening inside here. Fine. Then there's another question from Sandra. Sandra Okumu says, what if the machine is flooded by external cause such as flooding? Then it's got to be external, it's got to be IAR. Sandra, come on the line, Sandra. Sandra, where are you? Come on the line. Sandra?
Yes, hello.
Hi, Sandra. Where are you from?
Uganda.
Uganda. Which company are you working for?
Uganda Re.
Uganda Re. Okay,
yes,
okay.
Yes.
Okay. So,
okay, I thought machines are generally not covered under IAR. That's why we need the extension, machinery breakdown extension.
No, the machines are covered for external features, but it depends how you arrange your program. In a factory, you have buildings, you have stock, you have machines, you have fittings and so on. So if you already covered your IAR for everything, then all the external features are covered under IAR, including the flooding affecting the machine. But if the machine fails by itself while running, that's an internal problem. So the internal problem, you need to have the MB policy.
All right, thanks for the clarity.
So Sandra, in the ideal world, you need both the policies. You need both. But sometimes underwriter does not want to give MB because the customer doesn't have good maintenance. The customer is horrible. They are just working 24 hours a day without doing maintenance, not doing any servicing. So that is not good because the machine will break down. And you have a big claim to pay. So you don't want to give MB to those kind of dangerous customers. So that's why underwriters want to see which one you want to give MB, which one you want to give IAR. Got it, Sandra?
Yes, so the MB extension is supposed to come with an additional premium, right?
Of course. Having said that, sometimes it's used as a marketing tool. It is used as a marketing for free because you already got the IAR and you just tell the customer, we are giving you 1 million cover for MB and we throw it in free, but actually it is just 1 million or they put a sub limit to it and there's a high excess of 200,000 US. So I'm not sure about your market or what is the practice. Do you know, Sandra?
I would need to get back. No, I'm not sure right now.
Okay, no problem. Yes. I'm just trying to bring to your attention about it. So otherwise, we have to ask Ronald about it. Ronald is your CEO, right?
Yes, he is. Yes, he is. But I think ideally there should be a premium charged for every extension.
Exactly.
Yes,
but
only that in Uganda. In Uganda, we have what we call minimum premium rates.
Oh, of course.
Yes.
But the premium charge, the business model, I can't comment because it depends on country to country. And there's there's business consideration and so on. So I don't want to go into that. Okay. Thank you.
Right.
Thank you, Sandra. Thank you. All right. There's a comment here from MacWeb. MacWeb, my good friends, saying insurer can ask for maintenance history before. Yes, you need to ask for maintenance history. You need to ask for a lot of information. You need to know a lot of things. For example, you need to know their service record, who is maintaining it, and so on. There's a lot more to do. So I will go through that in a minute. We are down to our last half an hour, so I need to get back to my slide and deal with a little bit more on the technical aspect of this policy. So these are some of the points. You can see here the policy is very wide. Unforeseen and sudden physical loss damage of any cause, such as, it goes on and on. It goes on to lack of skill, carelessness, shortage of water in boilers, and physical explosion and so on. Tearing apart on the account of centrifugal force, short circuit, or any other cause. So this is why I'm telling Sandra, your exposure for MB is great. It is very wide. Although they have some exclusions, but you have to pay. You have to pay. You got to pay for physical explosion. You got to pay for lack of skill and so on. So Sandra, are you able to come to the line?
Yes, yes.
So I'm trying to show you here that the MB exposure is very high. If you don't have a good practice of maintaining well, we better not cover this. Sandra, do you drive a car?
Yes, yes, I do.
Okay, so when you drive a car, does the insurance policy pay for breakdown? For example, if the gearbox fails, or if
no, it doesn't.
It doesn't. It only pays for accident. So the IR is like an accident policy. It covers for accident from external factors. But when you have a breakdown inside your car, you have to take care of it yourself. You got to pay your bills yourself. How do you avoid having breakdowns for your car, Sandra?
Good maintenance.
Exactly. You need
regularly,
good servicing, regular maintenance, driving your car carefully. Don't go speeding. Make sure you put the engine oil. Check the radiator water. Is that right? So,
yes,
so
that's
those
right.
are good. So similarly, in the factory environment, you need to have a good practice. You need to have a maintenance engineer looking after the practice. So that's why I'm concerned that when you want to give the MB cover, you got to make sure that they have all these practices. And one of our friends suggested we should get the maintenance history. So like your car, do you have the maintenance book with you?
Yes, I do.
Yeah, so
I do.
If I'm going to buy your car, I'm going to ask you, Sandra, can I see your maintenance book? So I will check how often you've been sending your car for servicing. So similarly, the explanation is applicable for the machinery breakdown. I hope I made it clear.
Yeah, very clear. Thank you.
Thank you. Thank you. Thank you. Okay, so there's a comment here. Angela says breakdown such as gearbox is covered, but based on contribution, I'm not sure. Angela, do you want to come to the mic? Angela? Angela, you want to come to the mic?
Yes, I'm here.
Hi, Angela. Which company are you from?
Hi, Africa Re.
Another reinsurer. Angela from Africa Re. Yes, hi. Which office are you from?
Kenya. I'm in Kenya.
Oh, you're in Kenya. Okay.
Yes.
Okay. So your question is breakdown such as gearbox in which policy, Angela?
For example, the question you've asked Sandra on if she drives a vehicle and then, maybe there's a breakdown of, let's say, a gearbox. The policies in Kenya, if I am 100% right, is gearbox and the shocks and other parts that are not really accident related. But yes, it must be based on an accident, will be covered, but on a contribution basis of 50%. So that means I, as insured, I pay 50%, and then the insurance company caters for 50%. But also, it depends on how new my vehicle is. For example, tires. If tires are subject to wear and tear. If how old are my tires? If I got a tire yesterday and then today, then my tires basically are new, they're not old. So the insurance company is supposed to cover 100% of that
Yes.
tire, yet it's not really covered.
Okay, I understand what you're trying to say, Angela, but my question to you is regarding your gearbox incident. Are you referring to a road accident or it failed by itself?
Could be both.
No, it cannot be both.
I don't know how you'll answer this. For
Yeah.
example, okay, fine. If let's say it broke down on its own, then the insurance company will not cater for that.
Exactly. Stop there. What I'm trying to say is the IR policy will not pay if the machinery fails by itself. But if it's happened to an external factor due to flooding, IR policy will pay for the gearbox. Now we come back to the car. If you're driving your car and sorry to say you went a bit too fast, you lost control, your car turned over, and in the process the gearbox is damaged, yes, I understand the company will pay 50% because there's some settlement procedure for gearbox. It's a wear and tear element, they will only pay 50%. But the cost is important. We need to differentiate between the gearbox failing by itself and road accident. So I hope I made myself clear. Two different scenarios.
Yeah, I think now this is clear. Yeah.
Thank you. I'm sorry, referring to the motor car to make you understand about machinery breakdown.
All right.
Okay, thank you. Thank you. Okay, there's a comment from Chinmaya Relan. If a firm has taken both IR and MB, will they need to take MB LOP as well since the BI is covered under IR? I don't think they need to, because, sorry. Is it a standalone or not? Okay, Chinmaya, do you want to speak to me on the mic? Chinmaya?
Yeah, hi, Mr. Pooba.
Yeah, hi, where are you located?
I'm from Dubai.
Oh, Dubai. Just hold on a minute. Just hold on. And which company do you work for?
I work in Marsh.
Okay, Chinmaya, so your question is if they got two policies and blah, blah, blah. So I will say, if they arrange a IR with MB extension, so there's two scenarios. One is IR with MB's extension, and the other one is the person who bought two policies. This is the other way of doing it. Two policies. That means you got IAR and then you got MB separately. This is two situations. So this guy, I will say that in this case, I will say that the BI is covered, even if there is a MB loss. In this case, you need to must add separate MBLOP. Because it's two different policies. Can you see, Chinmaya?
Yeah.
It's two different policies. So this is my response. Clear enough?
Yeah, okay, understood. Thank you.
Okay, all right, thanks. Yes, you're right. Austin goes on to explain sometimes you need to have an MBLOP in case the loss is not covered by IAR. Yeah, correct. That's right. It's safer to have that. So it also depends on the structure of the arrangement. Yeah. Thank you, guys. I need to step on a bit because we are down to our last 20 minutes. Okay, so moving on, general conditions. These are some general conditions taking reasonable precaution. As I mentioned just now to Sandra, she's got to service her car. She's got to put engine oil. She's got to put water for the radiator. She's got to check the tires. She's got to drive carefully. These are expectations of our dear friend Sandra, who's driving a car. Okay, immediate notification. These are some of the policy conditions. Then settlement, similar to the IR policy at insurance option. These are going on to say some of the coverage aspect. Okay, it does not cover for workshop, external workshop type of work, but maybe I should just mention here, these are some of the exclusions in the policy. The policy doesn't pay for excess clause, loss or damage to extendable tools. Okay, this one, C is interested. C is very interesting. Why doesn't it cover all this? Does anybody know why the MB policy does not pay for fire, lightning, aircraft impact? Yes, anybody can tell me?
Because they are external factors, MB for internal, so you can take an IAR.
Exactly. Thank you very much, Nana. Nana, did you know this before, or it's because I told you this?
Well, you just said it, so it's fresher.
Okay, no, because these two products are always very vague. It's always very vague, and I have a feeling there's a variety of policies in Africa. I've seen a few samples, and they are not consistent. Nana, are you agreeable with me?
Yeah, there are some differences, but it's the basics is very similar.
So are you saying the basis is section 1, section 2? Section 1 is material damage, section 2 is business interruption. Are you agreeable to that?
Yes, I am. Even though some people want to take the MB as a standalone,
yes,
you know, but yes, when it's together, you know, when you have the IR and you have the MB on it,
yes,
section 1 is for the other assets, and then there's the MB as another section, yes. And then if there is the consequential loss, that's also another section.
Okay, okay. So I just want to tell you, in Myanmar, just for comfort, for information, in the Myanmar market, they also have the IR policy. And I told you yesterday, they have section 1, section 1 is covering material damage. Then they have section 2 covering the BI, and they have a section 3, which is covering the public liability. So liability. So this is in Myanmar, and they have their own practice, just like I commented about Africa. So Myanmar, they have their own arrangement. This is section 3. So which is not in Singapore. In Singapore, it's not. In Singapore, we just have this. In the Singapore market, it's just this. In Singapore, it's just section 1 and section 2. Nana?
Yes.
Are you thinking of making a trip to Myanmar to learn more?
Oh, well, in Ghana specifically,
yes,
especially for assets or risk, it is in this format. There is the material damage, BI, and public liability.
Together?
So, yes, in one policy. Yeah.
Oh, okay. So I'm learning something. This is not only in Myanmar, but in Ghana as well.
Yes.
Okay. Okay. Interesting. Interesting. Okay. So maybe you have some connections with Myanmar. Okay. Thank you. Thank you. All right. So there's some response about why the cover, and Michael said that this is external perils. Yes, correct. Emmanuel says exclusions MB policy, why should be given as an extension IAR is not conflict? Well, MB exclusion, okay, Emmanuel, once you've done a call, okay, all right, guys, I think MB is about internal perils. External factors also in Nigeria is the same. Okay, let's call Emmanuel to have a quick, Emmanuel, just say a few words. Emmanuel, you want to say something? Emmanuel?
Yes, Pooba.
Yeah, Emmanuel, where are you from, Emmanuel?
I'm from Nigeria. I work with Continental Re.
Okay.
Yeah, I don't know what exactly you want me to make comment on, but then with the Myanmar market, Nana confirmed it's the same thing in Ghana. and I'm confirming it's the same format in Nigeria.
So is you have three sections, is it? You have three sections?
Yes.
Oh, okay, okay.
Yeah, then the other question I was trying to ask was, I'm trying to, so personally, I think I would appreciate that machinery breakdown policy be separated from the IAR, especially for machines.
Okay.
But then the question I wanted to ask was, when you raised the exclusions on machinery breakdown,
yeah,
they seem to be in opposite with the coverage of IAR. So why don't we then merge both of them as it were in the same policy? Or not merge, why then should we have MB as an extension on IAR as against it being a separate policy as a whole? That's my question.
It is true. There are some markets who give MB as an extension. There are others who give it as a standalone product. So I cannot control that. Different markets have different arrangements or different accounts. So Emmanuel, some accounts they do it that way, some they don't. I just told you it all depends. There's no clear or fixed arrangement. All right, I think Emmanuel is possible. It's possible. Okay. Geraldine is asking about it. So Geraldine, the answer to that is this is confirmed by our friend just now, Nana, and also confirmed by Emmanuel that is practiced in Myanmar and Ghana and in Nigeria as well. So they have three sections in the policy. Okay.
Pooba, let me just, in reference to Geraldine's statement, it's not an extension, it's a section on its own.
Oh, section on its own.
I think there's a difference between extension and section.
Yeah, so it's section 3, right?
Yes, that's correct.
Yes, section 3. Okay, thank you. So that's in Ghana and in Nigeria as well, right? Emmanuel, are you talking about Nigeria as well?
Yes. Yes, Nigeria as well.
Okay, so my takeaway today is that I've learned that IAR has got 3 sections in Myanmar, in Ghana, and Nigeria. Okay, so with that, I like to just ask everybody to type in the chat group what they learned from today's class on the MB policy. Can I ask everybody to type something in the chat group? What did they learn about the MB policy, guys? Say a few things about what you learned in the MB policy. MB policy. Can you type a few things what you learned in the MB policy? Yep, thanks, McWeb. Talking about internal perils, extruded perils. Tulani says internal. Yeah, that's good. That's good. Faulty design is covered. Yes, faulty design is covered in the MB policy. We try to make the difference between MD and so on. Internal perils. Yeah. Internal perils. Okay, that's good. So we are coming to the end of the program. It's just coming to 1 o'clock here in Kenya. We are now going to just do some closing ceremony, and we are going to take some photograph as well. But for the closing session, we like to cordially invite Miss Cynthia. Miss Cynthia is the COO, Chief Operating Officer of Clapton Re. We'd like to invite Miss Cynthia to say a few words to the audience and to all of us. Over to you, Miss Cynthia.
Thank you, Pooba. Let me just sort out my video briefly, just a minute.
Sure.
Okay, I think that's...
If you can move your camera a bit, it'll be good. Thank you. That's
okay.
Good. Yeah.
Is that better? Thank you.
Yes.
All right.
Thank you.
Fantastic. Thank you so much, Pooba. I'd like to thank, I think on behalf of Clapton Re, I'd like to thank everyone who logged into the call. I'd like to thank everyone for taking time out of your schedules to participate in this training. I found it very engaging, very enlightening. And I think there were some very pertinent questions that were raised that made the training very interesting. There were lots of great questions. There were lots of insights shared. I think it's been emphasized that this is part one of a two-part training series. So as Clapton, we would like to encourage all of you to look out for part two. We'll be announcing it via our various social media pages. So please look out for it on LinkedIn, Facebook, and we'll also announce through our website. Following this, you're going to receive a few emails. You will receive an email for a post-training survey. So it's just 5 questions regarding this survey that would like you to complete and send back to us. It really helps us shape any future trainings that we'll have. Also, you'll get course material and the certificates that will be shared by our great partners at OESAI. We will also share our newsletter, Clapton newsletter. This was published yesterday, and it gives some details on our recent activities. Would encourage all of you to read it. Pooba, I know it's evening. I think it's 7 p.m. in Singapore.
Yes.
I would really like to appreciate the effort and the time that you've put in. Would like to acknowledge your outstanding knowledge and the skills that you've imparted to us over these past 2 days. Thank you very much for keeping it lively. Thank you for keeping it engaging. There's clearly so much, information out there on these 2 topics. We couldn't possibly cover it within 2 days, but we ensure that we have part 2 to allow you to continue. It was our great pleasure to host you. Our friends at OESAI, thank you so much. OESAI is a very valuable partner, and we're incredibly proud to be associated with them. I'll keep it brief. Really, thank you, everyone, and have a pleasant day. Thank you.
Thank you. Thanks, Cynthia, for the kind words and comments. Lot of information to come out from Clapton Re and OESAI after this event. Can we now invite Ms. Rose Wanda, Secretary General of OESAI, to say a few words. Ms. Rose Wanda, are you online somewhere?
Yes, Pooba, thank you. I've been online. I was just telling Cynthia that I arrived this morning, but I have not slept. You just captured my attention throughout.
Oh, really? Thank you.
Yes. Thank you so much. So, on behalf of OESAI, ladies and gentlemen, it's unbelievable that the 2 days are done. And I feel immense pleasure to propose a vote of thanks. I would like to express my sincere gratitude to Clapton Reinsurance, who have really made this training possible by supporting it. We are proud to say that Clapton Re is a member of OESAI and are really pleased to have collaborated with them. Thank you, Mr. Webster and Ms. Cynthia and your entire team worked closely with the team at OESAI to make sure that this is a success. I also want to express my sincere gratitude to our trainer, Mr. Pooba Mahalingam. Pooba, I hope I've pronounced it correctly, the second name.
That's fine.
Yeah, indeed, you will agree with me, participants, that we are more enlightened and a step ahead, more than we were yesterday before the training. Personally, I managed to sit in through some of the classes, and even though I'm not a general insurance expert, being that my background is in life, I can confirm that he made some concepts more clear to me with real examples. Therefore, Mr. Pooba, your efforts were not in vain, and I'm sure the participants also feel the same. So thank you to your team at Talent Asia Training and Consulting.
Thank you.
My deep sense of thanks also goes to the participants who were enthusiastic throughout and participated fully. I think I can remember Nana. She's the one you've said we go to Ghana to talk to her. So thank you, team. Represented by, and who?
McWeb.
Okay. So McWeb, thank you, team, for taking part by asking questions, taking part in group discussions, and even answering questions. We have been in trainings where sometimes the trainer will ask questions and the room is silent, so it becomes very difficult for the trainer to know whether the participants are understanding or they're not. Now, last but not least, I want to thank my own team at OESAI who have worked tirelessly to make this event a success. I must confess that I have not really taken part in the preparations as I was held up in other areas, but you can see that we really do have a good team here at OESAI in terms of succession planning. And they were able to execute it quite well together with the trainer and Clapton Re. Now, for our participants, those who've qualified for CPD points, we have partnered with Insurance Training College in Uganda. So I had somebody here from Uganda Re, and also IISA, which is the Insurance Institute of South Africa. If you have sat throughout, then you qualify for CPD points. And really, these are some of the benefits that as OESAI, we are planning to roll out in other countries too. So don't hesitate to contact OESAI so that you can get back your full benefits. At this point, I say thank you, God bless you, and see you in Zanzibar for those who will be coming to our conference. For those who are not coming to our conference, then let's see each other at part 2 of this training.
Rose, Rose, just hold on. We're going to take the group photograph. So ask everybody to switch on the video and we take a group photograph. Meanwhile, Rose, there was one question from Joseph. He is asking, where is the headquarters of OESAI? Maybe you can say a few words about OESAI and the location, please.
Okay. So Joseph, OESAI is currently domiciled in Kenya, Nairobi at Sanlam Building, 2nd floor. But our offices can change anytime to any of the 18 countries where we operate from. So for now, you can find us in Sanlam Towers.
Thank you. And one more question. I've got a few questions here on the chat group. Rose asking, when is part 2? When is part 2 of the training? And when is the conference in Zanzibar? Maybe you should say something about Zanzibar as well. Rose?
Okay, for part 2, as Cynthia has said, is please be on the watch out. Check our social media pages, Clapton Re, OESAI, and you'll definitely be able to know when we'll be having it. So just be on the lookout. For the Zanzibar conference, we are going to have it from 28th of August to 1st of September in Zanzibar. Please come, it's high profile. We are just bringing you some of the best in the market. So don't miss out. Approach your managers. Never be afraid to ask for something. The worst that can be done is for you to get a no.
Okay, thanks. So guys, let's take our group photograph. I urge everybody to switch on the video so that we can have one big group photograph with everybody showing their hands, maybe with a thumbs up for all of us, you know, a thumbs up for Clapton Re, a thumbs up for OESAI, and also the humble trainer from Singapore. Yeah, thank you. So a big smile, everybody, and also the thumbs up. Yeah, come on, guys, give us a thumbs up. Are you ready? I'm taking a few shots. Ready? Yeah, let me take a few. Okay, that's the first one. Now I got to go to the second one. So there's a few sessions to take. Yeah, that's it. That's the second one. Now I'm going to the third one. Third screen, big smile. Yes, thank you. Now I'm going to the fourth screen. Fourth screen, big smile. Oh, this is a big group. This is a big group. This is big group. That's Maureen there. Yeah. Now I'm going to the next one. Okay, this is the smaller group. Some of you all are not having your camera on. Okay, that's it. So the other few pages, there are not many people on the screen, so no camera. So good, we are all here. Rose, shall we close the matter? Close the training session and say thanks to everybody. Enjoy your lunch. While in Singapore, we're going for dinner now.
I think everybody can unmute and just say goodbye in their language.
Ciao. Tata.
Ciao, ciao, see you.
Ó dàbọ̀. Ó ní ìgbà kan náà o. Bẹ́sẹ̀ dààmú Nàìjíríà. Abẹ́lá
Benine. Oriti uru.
Tisabonana.
সে কনফার্ম করে দিছে থেকে কনফার্ম
Okay. Right. Let me talk out of meeting.